Invest in gold in a pension as a hedge and a store of value. So says Ken Rogoff, ex-chief economist of the IMF. Hi, my name is Mark O'Byrne, and I am the research director of goldcore.com, your precious metals delivery and storage specialist. And in today's market update, we're going to look at a very interesting interview that was conducted by the World Gold Council, I think very recently, and only released in the last day or two. So it's fresh, hot off the press, as they say. And we think it's quite interesting, quite important, because Ken Rogoff is the ex-chief economist of the IMF. He is a leading economics professor in Harvard University, and he is one of the people at the vanguard of the movement towards a cashless society. He's one of the chief proponents of a cashless society, moving towards a cashless society in recent years. So it's very interesting because, you know, ordinarily people who are in favor of the cashless society tend to be quite anti-gold, because gold is obviously a superior form of cash and a better form of money. So there tends to be antipathy, shall we say, towards gold amongst these more statist-minded economists, you know, within the centre left and Keynesian public policy circles, and indeed central bank circles. So it's quite interesting, the interview, because Rogoff is basically saying that gold will become more important in the cashless society, which is long what we've been saying and long has been our view. And but it's interesting to hear from him. So yeah, it's a fascinating interview, and there's a few things that he said. So I'm just going to share with you the piece and then highlight some of the key aspects of it. So this is the piece here. It's literally just released now 2 days ago on Tuesday, February 12th, by the World Gold Council. And if you're not signed up for the World Gold Council research, I strongly suggest you do. It's excellent, and they put out some really important research. It's all fact-based, evidence-based, empirical data, and they put out a report just recently talking about gold's relevance in a portfolio in 2019, and they had some excellent data looking at gold's performance vis-a-vis other assets over the long term. And it's some of the best research I've seen in a while, you know, and it's a shame that this research doesn't find its way into the mainstream frequently. So this article, yeah, it's Ken Rogoff, as I said, professor of economics and public policy at Harvard University. So he's also a grand chess master at a young age. So this man is a super brain, egghead, as they would call him, but I'm sure he's a lovely man, super intelligent, and as I said, he's one of the chief proponents of this cashless society. So when he speaks, it's important to listen, because he basically has the ear, or is actually speaking on behalf of central banks and their view on policy going forward. And he is basically saying, in this article called "The Curse of Cash and the Allure of Gold." So that's the title of the interview. So in this interview, he's basically saying people should invest in gold. Retail investors, pension funds, high net worth individuals, and indeed central banks should own gold as both a hedge and a store of value. And I think that is basically confirms that you know, the view towards gold within the senior policymakers in the central banking circles in the West remains quite favorable, you know, and I think they realize that gold is going to play a role whether they like it or not, and therefore they want to almost have gold as part of protecting the current fiat monetary system, and indeed potentially backing some of the current fiat currencies when the people start to lose confidence in them, which they will do given the amount of money that's being printed. So, and I think it's a way they can circle the wagons, because they are threatened to a degree by the movement towards digital currencies, particularly by younger generations, moving towards Bitcoin, obviously, and a host of other cryptocurrencies. They have most of these cryptocurrencies collapse in value, as we said they would, but a few of them will survive, and a few of them will do very well indeed. And the question is which ones, you know. But it is a threat to the current banking system, fractional reserve banking system, and indeed the fiat monetary system that we have today. And it's interesting, basically he again says that they are a fad, and they're not an effective replacement for paper money, which is interesting. And he basically says that government always wins. So he's basically saying the governments will clamp down and they'll regulate the hell out of the cryptocurrencies, and this will stifle them and potentially, put them out of business in effect, So, which, who knows, that may come to pass. It seems to be happening already. But I'm not sure I share the view that government always win. Government tends to win in the medium and long term, but I suppose it depends which government is in power and who is in power. And, if you get left-wing government, right-wing government, a more authoritarian government, a more libertarian-minded government, if you get a government that is more about protecting the interests of individuals and families and companies, as I think most of us want, then, that becomes less likely that you would get an authoritarian government that's stamping down on I suppose, cash and people's freedom of choice when it comes to what currency and what stores of value they want to use. So he makes the point there's an incredible disconnect between the fact that cash is disappearing in legal tax compliant transactions, but exploding in terms of how much central banks are printing. And I suppose he also then makes the point that this creates the real risk that, we already have $1 trillion deficits in a so-called recovery in the US. People around the world are living way beyond their means, and it's been basically funded by printing money, and the $1 trillion deficits looks like they're going to start increasing, and we're heading towards $2 trillion deficits, and ultimately that's going to lead to very significant inflation. And he warns that this will lead to, how does he put it? He basically says that the inflation will take off. So I'll scroll down the piece here. Because the wording he uses is quite interesting. The easiest way to find it is that. Yeah, so he says it here. Deficits have doubled or tripled by then. Inflation is bound to ensue. Our system is not built for high inflation, so it would cause incredible financial turmoil and stress. It may take decades, but these things always tend to blow up at some point. So I think he's being very optimistic about decades. I think our view is, and increasingly more and more economists are coming to view that this is a real risk. If not in the short term, definitely in the medium term, and potentially in the short term, given the degree of the imbalances and the degree of the global debt bubble. So, yeah, it's a fascinating article, and he basically says it's not only that gold will have a bigger role in a cashless society because of its value as a hedge and a store of value, but he also says that the value of gold will go up quite significantly. He says gold will have enormous value as a hedge, but it's also likely to increase in value because he believes both central bank demand is going to increase and global demand will increase. Global demand will increase as people around the world lose faith in fiat currencies, and obviously this has been seen in the trend towards digital currencies. And he makes the point that trend towards digital currencies will obviously benefit gold in the medium term and long term. So it's a fascinating article. I'll just scroll down to, there's another quotation there which I thought was quite good. As a hedge, gold has enormous value, so it makes sense for high net worth individuals and even for some pension funds to hold a small percentage of their assets in gold. If it makes sense for high net worth individuals and for pension funds to hold a small percentage of gold, then it does make sense, obviously, for retail investors as well. And in small pension holders, everybody should have an allocation of gold. The question is how much. Obviously depends on the rest of the assets that you own in a portfolio, and depends on your age and your appetite for risk, and I suppose your view on these risks yourself, and ultimately what makes you sleep better at night, and if you're very concerned about these risks, you might have slightly higher allocations, and if you're not very concerned about these risks, then you should obviously have a smaller allocation. But everybody should have that allocation to gold, because he makes a point, you never know what's going to happen, and when something really bad happens, gold is probably going to be worth a lot to you. So that says it all. So it's a fascinating article. The cashless society, there's real risk to the cashless society, and I disagree. In fairness to him, he's not a proponent of this totalitarian, completely cashless society. He's saying that we should keep the smaller banknotes, but he's saying we should outlaw the bigger banknotes, which I disagree with. But at least he's not saying we should not have any cash whatsoever, because I think, there is a real value in having cash. Having all our eggs in that one digital banking system, financial system, central banking system, electronic system in effect is very risky indeed, because you have huge dependency on technology, on Wi-Fi systems, on electricity and electrical grid in all our nations, some of which is quite antiquated technology in various nations, including in the US. So electromagnetic pulse, EMP warfare is next generation warfare that we covered it in our market update probably 10 years ago plus, when we saw an article on the front page of the Financial Times talking about electromagnetic pulse warfare. So it can take out electrical grids, in which case, you know, your digital money in your digital bank and your MasterCard and your Visa card and your ATMs is not going to be any use to you whatsoever, you know. So in that scenario, it's good to have some cash, it's good to have some gold, and good to have some silver outside the banking system, or accessible in a way whereby you can take delivery very, very easily and very quickly. So, I mean, our view, we talked about this at Money Conference and the video we did there about the Cashless Society. We believe that, you know, people should be allowed to decide what currencies they have, you know, whether it's Hong Kong dollars or Singapore dollars or Swiss francs or euros or pounds, you know, with modern technology, or Bitcoin or gold or silver, you know, and obviously with the ones with the blockchain now, you know, there's so many options for people, and people should be allowed to choose what type of currency they want. If they want to have cash, physical notes, and they want to have actual bank notes, or they want to have actual gold coins, gold bars, or silver coins, silver bars, they should be entitled to do so. And that creates a more robust and I suppose a stronger financial system, stronger consumers, stronger investors. It creates that the individual becomes empowered. They have a degree of sovereignty. They're not dependent on the system, you know, and we think that's fundamentally important. So you need these variety of different payment methods and stores of value, and that is a healthy payments and savings ecosystem. Whereas today, that payments and savings ecosystem is very fragile indeed, and it's the real risk of bail-ins, and that's the real risk actually the cashless side as well. And I think it's part of the reason that some of the more Machiavellian elements in the central banks are pushing for the cashless society, because ultimately they know that they can put interest rates below zero. They can actually take money off people out of their bank accounts and fund their central banks and fund governments. You know, if you go to negative interest rates, yeah, I mean, it's very dangerous indeed. And also they can do what we've long talked about, and we've been one of the chief proponents in the world to talk about bail-ins and the real risk of bail-ins and the confiscation of deposits in the event that the banking system and banks get into difficulty again. And if you have all your eggs in the banking system, then obviously you're very, very exposed to that indeed, you know. So in some ways, they don't want people to have the ability to have cash or gold or silver outside the banking system, because it means that the bail-ins would be less successful, you know, in some ways. And so I mean, the real risk with the cashless society, and let's hope it does come to pass. I think more and more people are beginning to wake up to the real risks on it, and also just, you know, having a consumer, a citizen completely dependent on the government in terms of being able to make payments, to buy goods and services for themselves or their families, you know, in the hands of an authoritarian government. And, you know, it'd be right wing or left wing. There's a lot of populism in the world, lots of movements in different directions. But in the hands of the wrong type of government, it could be very dangerous indeed to be able to monitor every single transaction of the citizens, and then to indeed just stop individuals from buying food, from buying essential services that they need, you know. So this is the real risk from a cashless society, and that's why it's important that we don't embrace it wholeheartedly. We take the best bits of cashless and digital, and it's very convenient and very handy, and there's huge benefits from it, but it's important to be mindful of the risks as well. And Rogoff's piece is very interesting in that regard, because you know, even the elite central bank, the policy wonks and the decision makers at the top of the central bank system are acknowledging the value of gold as a store of value. So as we've long said, just become your own central banker, you know, to have that form of independence. And yeah, cash is not a curse. Nothing, you know, it's just a form of money. It's a form of energy akin to gold and silver, you know. So to take some of that power back, take some of that energy back from yourself out of the system, protect yourselves and your families, and then your companies and your institutions, and because that's what gold is about. It's a safe haven asset. So thanks for your time, and you can catch up with the latest market updates on goldcore.com and sign up for there, and you can get our podcasts and our videos on all the usual channels, including YouTube and iTunes. And yeah, thank you. Take care. Bye-bye.